As a channel, we took an analysis of the money market funds for year 2024, and our analysis concluded on pointing at the best money market fund for year 2024 to be ETICA Capital's money market fund on the basis of its fast growing assets under management, signifying the high level of investing public trust and the level of customer experience supported by 24/7 customer service, the ease of placing appointments or booking appointments 7 days in a week, and accessibility to their online channels with zero or very low negative reviews. We have also considered the regulation. This money market fund is low risk compared with the bigger fund managers, their money market funds, on the basis of use of Tier 1 banks as their custodians and trustees, as well as their use of top-notch auditors for investor assurance, and not leaving out the fact that their asset distribution, their diversification is just similar to the largest money market funds, denoting no marginal exposures compared to such investors. And that reason, we have settled on ETICA Capital's money market fund to have been the best money market fund for 2024, considering their competitive returns to their investors, having started with a high of 18% and responding to the declining interest rates as posted by the treasury bills. Its returns fluctuated during the period and settled on an annualized average of high of 17.6%. And that simply means that for whatever amount you invested in the ETICA money market fund, for the whole year it gave you a 17.6% return, a good return, in fact an alpha return. We shall be looking at the asset allocation of all the investment vehicles by ETICA Capital. We shall also look at the performance rates posted by the various investment opportunities that are given by ETICA Capital, and we shall also consider for the first time the fund profile of ETICA's fixed income fund for those who may consider diversifying their investment for a different fund for purposes of averaging their returns. We'll be considering all that after 3 seconds short break, so don't go away. In the meantime, give us a like to this video and engage us in the comment section. See you after 3 seconds short break. Welcome back, and here is the performance schedule of all the investment vehicles by ETICA Capital for the year 2024. From the schedule, the ETICA Money Market Fund gave us an annualized return average of 17.6%, and that was the same as for the 12-month Special Money Market Fund, rather under the Wealth Fund, which also gave the same return of 17.6%. And that means the Wealth Fund investment vehicle having a prolonged locking period of 6 or 12 months, 6 months and 9 months, depending on the class in which you are investing, where the class A goes for 6 months locking period, class B went for 9 months locking period, and class C goes for 12 months locking period, then you are better off investing in the money market fund because of its other characteristics, such as accessibility and liquidity, because the returns were basically the same. The fixed income fund, which majorly invests on both short-term and long-term investment vehicles with a bias on government-issued securities, gave a return average of 15.8%. That is close to 1.8% compared to ETICA's money market fund. Sharia fund returned an average of 10.5%. Then we have the 3 wealth funds, which are special money market funds, and majorly what distinguishes the wealth funds, the special money market funds, and the ordinary money market funds is basically the locking period and the small advantage that you are given on the size or amount or percentage of the management fees. When we look at the general asset allocation for all those investment vehicles, the money market fund distributed its assets or diversified its assets in the or asset and management into the following asset classes. We have fixed deposits took a whopping 36%, government securities, those are the treasury bills and the bonds, took a 31% from the previous 49%, denoting the adaptation by ETICA Capitals, the fund manager, in reallocation of the assets under management in order to realize the higher returns. Cash and call deposits retained at 24%, while commercial papers took the least at 9%, and that's the extent of exposure. This fund minimizes on the exposures in order to maintain that competitive higher return. The fixed income fund spread its asset under management, obtaining or retaining a fixed deposit at 8%. And as we have earlier noted that the fixed income fund majorly targets to invest in relatively longer maturities in fixed income securities and majorly as a bias on the government issued treasury bills and bonds. And for that reason, it retained a 79%. The 4% went to cash and call deposits, then commercial papers took a 9%. You may ask the reason why the money market funds took a higher percentage in the fixed deposit compared to the fixed income fund, but majorly in 2024 we had high returns posted by the government securities. We had many bonds that were giving good, potentially good coupons, and for that reason, with the money market funds being limited to an horizon of 18 months weighted maturity period, and the fixed income funds breaking that ceiling and assuming a weighted average of whatever period is available, then the fixed income fund is meant to maintain relative competitive returns for a long period of time because they are not sensitive or very sensitive to the changes in the markets. And that is what has been used potentially as the reason why the larger fund managers are unable to give comparatively high returns compared to the newer entrants in fund management because of the difficult in portfolio rotation, releasing their investments in the previous long-term investments which were tied into lower returns to invest in newer higher returning instruments. Then the Sharia fund was distributed 71% to fixed deposits. We have government securities that took 0%, and 29% went to cash and call deposits, while also 0 went to commercial papers because Sharia compliant products, they are not interest based. Then lastly is the wealth fund or the special money market funds that are used for wealth management. 18% was held in fixed deposits, 65% was held in government securities, cash and call deposits taking 2%, and 15% being held in commercial papers. The 65% in government securities and a wealth fund compared to the 79% in government securities under fixed income funds, and the difference in their return based on their locking period. The 12-month locked wealth fund returned the same rate of 17.6%, the same as the ordinary money market fund. But considerably, it held higher percentage of its portfolio in government securities, just like the fixed income fund, which returned slightly lower at 15.8%. And the reason is that the wealth fund Those are special money market funds, and therefore they are also based on short-term securities. And for that reason, their response, the short-term securities in 2024 were giving relatively high returns. And for that reason, and owing to the locking period, which allowed to holding those instruments to term, to maturities of 1 year, then the wealth fund was able to manage the return that came from the ordinary money market fund. And comparing those two, it's important to note that the money market fund during these unstable economic times, because when we have instability in the economy, that makes the higher horizon riskier or uncertain, and for that reason, most investors would want to put their investment in short-term securities, and because of that high demand, short-term securities which give such good returns. Then lastly, we are looking at the fixed income fund profile. This ideally is for purposes of those who would want to maybe diversify, not by getting another money market fund, but diversifying into a different fund, which gives them an experience and a feeling of investing in a different asset class. And when you look at the difference between a money market fund and a fixed income fund majorly is based on competitiveness when it comes to horizon or maturity period. When the economy stabilizes, the fact that the fixed income fund invests in both short-term and long-term instruments, and looking at the nature of coupons that were coming from the instrument that were issued and reopened in 2024, then the fixed income fund will be more resilient and non-responsive to the market interest rates. And for that reason, it's supposed to give us a prolonged, averagely higher return compared to the money market funds. And these are the fund details of the fixed income fund. The fund name is a fixed income fund. It is based on Kenya shillings, and the inception period was February 2023. The fund manager is ETICA Capital Limited, and this fund is regulated by Capital Markets Authority. The custodian is Equity Bank, a Tier 1 bank. The trustees are Corp Trust or a cooperative bank, another Tier 1 bank, and therefore comparing these fund, custodian and trustee, and the other funds that are managed by the largest fund managers, you realize in that case they are using Tier 1 banks as their custodian and trustees. The auditors is top-notch, RISM, East Africa. RISM is a global auditor with origins in UK and US. Compounding for this fund is on a daily basis, which means that the interest that you earn is accruing on a daily basis, computed on a daily basis, and paid to combine with your investment or capital on a daily basis, meaning that interest that you make or generate from your investment starts generating more interest the following day. Management fees is 2% per annum, prorated on a daily basis. It doesn't wait at the end of the month for its deduction. It's calculated and recovered on a daily basis, as your interest is also calculated and credited on a daily basis. And therefore, any visit that you make into your account, when you access your account, you will potentially be seeing a daily increment in your fund value, because always the management fee is based on the yesterday's capital amount, while and not the interest return, making it a small amount. When recovered, you will always have a net increment in your fund balance. There are no initial fees, neither do we have redemption fees in this particular fund. Also, there are no ledger fees. Locking period, this is an open fund. There is no locking period, but you can elect to lock your fund account. But this, once you choose to lock your account, you will not be able, just like the money market fund, you will not be able to unlock it from your end, and that is for security purpose. You are supposed to do a short email to the fund manager, and your account will be unlocked immediately. The fund is benchmarked at the 182-day treasury bill plus a 1%. That distinguishes this fund from the ETICA money market fund, which is benchmarked on the 91-day treasury bill plus 1%. The fund in year 2024 had an average return of 15.8%. The minimum investment amount is 100 shillings and a top up of 100 shillings. So conclusively, when you look at the fund details of the fixed income fund, they are merely just the same as the details of the money market fund. So investing in ETICA's fixed income fund or its money market fund, you'll enjoy or experience the same features. The only distinction will be the difference in the returns occasioned by the nature of the asset allocations and the distribution. But potentially, the money market fund will always respond to the short term changes in treasury bills, and therefore its objective is to give you the highest current returns, while the fixed income fund, which is more resilient to the changes, is supposed to give you average high returns for the long horizon. Lastly but not least, if you would wish to create or open an investment account, a money market fund account with ETICA Capital, check the link from the comment section or from the description of this particular video. Thank you for watching and see you in the next video.